What is going on, guys? Welcome back to the channel. My name is Tyler, and in this video I want to talk about how a stock market crash would cause the AMC Moass. We have seen this in history with Volkswagen. They short squeezed at the bottom of the market in 2008, and it really comes down to this liquidity drying up. But I think some people are really confused how this would work, because hedge funds, just like the name, they hedge for market downtrends, so they would make billions of dollars, which is true. But I think a lot of people fail to realize the dynamics of what is going on during a market crash and how hedge funds react to this volatility and the market going down in price. So let's get into all this information. The only thing that I ask is that you tap, tickle, touch, or smash the like button, as well as subscribe to the channel. If you guys get any value out of this video, let me know what you guys think about this down below in the comments section. Now, I think it's about 50-50. Some apes think this would cause the squeeze. Some apes think this would not cause the squeeze. What I want to say right up front is AMC would not be immune to this. AMC would go down as well as the overall market until it gets to a certain inflection level. Like you guys see with the Volkswagen short squeeze, they went down about 50% in value, from about 400 euros down to about 200 euros before they did short squeeze up to 1,000 euros per share, becoming the world's most valuable company at the time in 2008. That did happen in October, at the bottom of the market for the global financial crisis. So it really comes down to the liquidity crunch of essentially the big guys of big short sellers of AMC. They have billions of dollars they could put into their short positions, never be forced to cover. But when they see their portfolio values going down dramatically because they're over leveraged and margin compounds your losses, you don't have that liquidity to put in your short positions. But it's not going to be the big firms that cause the Moass. It's going to be the smaller firms that start the Moass, and then the bigger guys that subsequently start to cover after that, because the price of AMC is going crazy. But like I said, AMC would come down probably to about $20 before it did get to that level where, say, the markets are down 30%, AMC's down 50%. You see that liquidity really getting crunched. Now, something along the lines of hedging that I do want to point out is that essentially if one firm is winning on a hedge, another firm is losing on a hedge. There is a net here. So it's not really to say all hedge funds are just going to get rich because the market is crashing. No, some firms are going to lose a lot. Some are going to make a lot of money. Same is going to be the same for short sellers of AMC. These big guys will probably make a decent amount of money, where the smaller guys will make less money, statistically speaking, right? Because they have less capital to play around in the markets. Something else that I don't think a lot of people are actually familiar with is that the overall nature of the stock market is that it goes up in value. Now, how hedging works, nobody knows, no hedge fund knows if the markets are going to essentially go through a severe crash, right? Nobody knows this, so they're not going to throw millions or billions of dollars into hedges to watch the stock market bounce again. So by the time you see all these hedges going on, or big hedges going on, the market is going to be substantially down. Imagine right now a hedge fund that has, let's say, $10 billion of assets under management, which is typically what you see with hedge funds, some obviously more, some less. They're not going to put 10% of their portfolio into hedges, which would potentially make millions or tens of billions of dollars of profits. They're not going to do that because ultimately the markets are more likely to bounce than not to bounce. So what I'm trying to say here is hedge funds and institutions, they are not going hedging crazy. They don't know if the markets are going to go down 30%. There is uncertainty. So what people fail to realize is, if you think about the short sellers of AMC, or just think about all hedge funds in total, if the market goes down, say 30-50%, it doesn't matter what hedging they do, they will all as a collective still be down a substantial amount of money. Some will make some will make a little bit, some will lose a lot, and some will go completely bankrupt. That is the nature of the stock market. If we go down substantially, it doesn't matter what hedging is done, you will still see overall hedge funds portfolios going down in value. And where we do currently sit, the short sellers of AMC, specifically the bigger guys, they have way too much money to ever be forced to cover if AMC was $1,000, $5,000, $25,000 per share. That is the simple fact here. But if their portfolios went down 30 or 50%, that would not be the case. They would not be able to remain in their short positions. And something that I've called out many times on this channel, you guys can think about this analogy like a staircase, right? The smaller firms, the most vulnerable firms are at the bottom. The bigger guys like Citadel and the top, say 10 biggest short sellers of AMC are at the top. You're going to see the smaller guys covering first, making AMC share price going up. You're also going to see a lot of just traders and FOMO buyers getting into AMC as a safe haven once the markets are at lows. Once they are depressed and suppressed, you're going to see a lot of people turn their eyes to AMC for the potential short squeeze, because it is obvious to anybody that when the markets go down, the stocks that are really prone to see big jumps are stocks like AMC that have a severely elevated short interest, just like we did see in 2008 with Volkswagen. So that can be seen as a bit of a hedge itself, going long on AMC when you're at the bottom of the market. But all in all, you're going to see a net loss, a huge net loss for hedge funds and institutions that are short on AMC. So that is what you guys need to know. If you guys are for whatever reason unaware of what is actually going on today, why the markets could go through a huge crash, analysts predicting a 30 to 50% decline in the stock market if the debt ceiling is not raised. Now, we're just going to read the key points because I've already went over this. It says Treasury Secretary Janet Yellen told House Speaker Nancy Pelosi that Congress has just under 3 weeks to address the looming debt ceiling and avoid economic calamity. In quotes, "We now estimate that Treasury is likely to exhaust its extraordinary measures if Congress has not acted to raise or suspend the debt limit by October 18th, Yellen wrote. Senate Republicans on Monday blocked a bill that would fund the government and suspend the U.S. borrowing limit. She has said that they could potentially go a couple days past October 18th, but they would be severely limited on what they could actually do. So that's the situation. We have never once defaulted on our debt. I still think it's very unlikely that we do. Probably, like I've said many times, about 75 to 85% chance the debt ceiling is raised. But if that, 25 to 15% chance does actually happen of them not raising the debt ceiling, this would be the first time in American history where the debt ceiling is not raised. We would default on all of our obligations. It would be chaos in the financial market. So we would definitely see a huge decline. We would see the AMC Moass. Now, the Ortex data, this intraday is giving us a 20.76% estimated short interest percentage of free float. Now, if AMC had an 10% short interest, so we wouldn't be looking at anything too crazy, but 20.76% is all-time highs for AMC. We've seen what happened back here in June when only 6% of shorts covered on their short positions. You guys can see May 28th, sentiment day for the exchange, reported short interest came in at 20%. The lowest reading we did get was June 30th at 14.76%, so about 5.6% of shorts actually did cover, and we see what happened with that. So if we see the liquidity get crunched down overall in the markets with the hedge funds, you're going to see way more shorts that are forced to cover. You're going to see an explosion of AMC. This is not an opinion. This is a fact. Ask anybody that knows about anything. They will tell you this exact same thing. If Apes stay in their positions and remain holding the line, which is exactly what is happening today. If you compare AMC to some other stocks, AMC is down 4.68%, which is not the biggest drop we have seen, obviously, with AMC, but still a sizable decrease in value, whereas, say, something like Snapchat is down 5.83%. Snapchat is even considered much safer. So I think right here just does tell you that Apes are holding the line. You can also see this given in the technicals where, yes, we are under $40, but we are not gapping down. You're not seeing a lot of selling pressure going into the stock. That is also reflected in the low volume that we are seeing at about 26.6 million for volume. So if a lot of people were selling, you'd see this huge volume spike going into AMC, you would see the share price going down. Now, as far as potential downside, watch this $30 level. Really, I think if AMC were to go to $20, the markets would have went down a lot in value, and that's really where you would likely see the all-time bottom, your worst case scenario. Then you would see a lot of the smaller shorts and mid shorts being forced to cover, and then once you get back up to about 60, 70, 80, 90, 100, that's where you'd see some of the bigger guys be forced to cover. At that point, the markets would be down substantially. They would not have collateral necessary to put in their short positions. So that is this theory. That is a little bit of the technical analysis. If we do bounce back up over 40, which is very possible even coming tomorrow, then obviously we'd still be in this consolidation phase, which I just overall consider this a consolidation phase. overall. So that is really what you guys need to know. As far as the debt ceiling is concerned, we could see a huge bounce if the debt ceiling is passed. Democrats can do this by themselves, so it would not surprise me if the debt ceiling does get passed in the next couple of days. And this is the ammo the market needs to send us much higher, possibly hitting all-time highs yet again, which would directly correlate into AMC going up in value as well. As far as the overall markets, this is the S&P 500 on the daily candlestick chart. Watch the 100-day moving average to see if we do bounce back up above this, like we did see it, well, drop under this, but then bounce back up above this. We did see this first drop under the 100-day moving average in the past 18 months. That was during this last sell-off back here on September 20th. Now we are right on our 100-day moving average. If we do gap under this, then you're going to see a lot of trading algorithms start to actually sell stock and to protect themselves. So that's what you guys need to know. Watch the SPY. That's going to be the biggest indicator of what is going to happen with AMC. So I'll keep you guys posted of any new information that does come out that you guys need to know. All in all, the silver lining is here. Eventually, this will come to fruition. The short squeeze will happen. If AMC does go down to $20 per share, that is your opportunity to acquire more shares, to create more wealth for yourself and for your family, and to ultimately follow what you are passionate about that does not necessarily pay you. So that is my overall thinking. That is the facts here. Why the market going down, you know, 30-50% would cause the mother of all short squeezes. So if you guys got any valuable insight or valuable knowledge out of this video, tap, tickle, touch, or smash the like button and consider subscribing to the channel. Let me know down below in the comment section what you think about all of this information. I expect criticism. I expect people to agree with me, so feel free to let me hear it down below in the comment section. All I can really provide to you guys is the factual information behind the Moass, how this would actually happen, the intricacies of how this would happen, but ultimately these are only my opinions, so come to your own conclusions. Don't base any trades off of what one person does say, but hopefully opinions are valuable to you just like they are to me. So hopefully this provided you guys some clarity, not to panic. We are at the cusp of potentially seeing the short squeeze. So with all that being said, guys, check out the links linked down below in the description for the buy and sell alerts if you guys want to be notified every time a trade is bought or sold in real time. We're going to be doing some hedging. If the markets do come down, we are going to make a boatload of money. Overall, that pays for itself time and again. If you guys want to support the channel, link for public, the link for Weeble as well. So that is all for this video. Hopefully you guys aren't panicking too much. I will see you in the next one.